Welcome to Total Money Management. I'm back with the Lord and Saviour, Steve Moriarty.
How are you, mate? What'd you say?
Our Lord and Saviour. Mate, I'm just going to come up with the most wild introductions for you moving forward.
Right,
to see if I
okay.
can put you on the spot.
Love it.
Right, so this week, before we get into it, last week we had a lot of subscribers into the week that was document. I think the penny's starting to drop a little bit, but for those that are listening to this, you might be in the car, you might be, I don't know, at home, whatever. There's a document that goes out every week that you can read. What we're reading from as well and summarizing for you. It's called The Week That Was. It's free to sign up and it's on our website, totalmoneymanagement.com.au. Just look for The Week That Was, or you can go to Instagram, it's on there as well. But it will make so much more sense if you're reading it. I know it's not perfect if you're in the car or something, but if you get the chance to read it as well each week. So plug done. And this week we're going to be covering March 17th to 21st. And we're kicking off with a bit of a Financial Times summary.
Yep. I put this article in and didn't write. Basically, my opening was, this sums it up. And what I was talking about is what we've been talking about is the amount of uncertainty around.
Yep.
I really like this article because it really encapsulates what we've been talking about, which is the disappearance of certainty, right? And look, it might be best if I just read a couple of excerpts from it. In today's financial markets, certainty appears to be an extremely scarce resource. Capricious policies from Washington have created a very unpredictable economic environment in which forecasting is virtually impossible, right? So that's what we said last week. Listen, it's a really hard thing for anybody to go, I know what's going to happen, right? Therefore, you should be saying, well, listen, I need to keep a bit of my cash aside, or I need to be really fleet of foot. If something goes pear-shaped, I need to sell out or, look at it. Whereas investors over the past several years have embraced speculative investments such as the Magnificent Seven technology stocks, cryptocurrency and shell corporations, they're now realising that pie-in-the-sky forecasts are useless when one can't anticipate tomorrow's policy changes, right? And another one up here. More importantly, impulsive policy changes, i.e. Donald Trump, keep investors guessing whether opportunities are real or a mirage. I'm not sure how any analyst can predict a company's quarterly or annual earnings with a conviction under these conditions. Okay, so I was visiting something yesterday where, and I'll put it in the next few weeks that was about sectors, right? When markets fall, you've got to look at where the money goes. And there's what you do is you get back to basics, right? So in other words, you buy consumer staples, right? Because people are still going to buy bread and milk and go to Woolies, okay? They're still going to do things, so you need energy, okay? Those things are fairly cheap and they're quite good. You'd rather do that than go information technology because everyone's going to buy iPhones. No, they're not. They're probably going to hang on to them, right?
Or AI.
Exactly. There's a lot of that stuff where you say, you know what, I'll just wait for the next edition, right? This TV's still okay, right? In fact, I could probably watch YouTube with the ads and save myself $20 a month, right? That's what's sort of going to go on. So we're going to get back to basics. So, Richard Bernstein wrote this article. He's a really good advisor. And also just talking about cash returns are more assured than those related to future growth, and these high-quality non-tech tech stocks also have a dividend yield that is nearly 4 times greater than the yield of US technology stocks, right? So again, don't be afraid of holding cash while the waters are pretty choppy. The second thing is, when we focus for the last 15 to 20 years on the capital gain portion of investments, right? Negative gearing is about losing money to make it up when you sell that sucker for an extra 500,000. If you don't, then you're sort of looking at it going, now I'm just losing money. Okay, so that's what we're sort of saying here is Tesla looks like, Tesla's looked great, but it's now lost 45% and it's still on a PE of 117 or something, right? So in other words, this is not one of those, dip time, right? No. This is another one of those, I'm not really sure. I think I might just wait for it to, revert first.
Yeah, wait till the dust settles, I think, is the easiest way to
say absolutely. Absolutely. But you see, Jacob, in bull markets, you always, and particularly when it's been a long one since 2009, you tend to think there's always somewhere to invest, right? Yeah. And sometimes you have to say to yourself, listen, everything's expensive. I think I wrote a reply to a fellow on the socials about that by saying, well, look, bonds mightn't be that attractive. Stocks mightn't be that attractive. Real estate
gold's
in Australia,
attractive.
Gold's had an absolute smashing run. Maybe everything's expensive.
That's okay.
And Bernstein finishes off with this. Scarcity tends to drive secular investment returns. Sometimes growth is scarce, sometimes value is scarce. Today, certainty and confidence are very scarce resources indeed. Right? So again, don't be afraid to move to a really conservative allocation until there's better signals to say, okay, Trump's been impeached and, we're all going back to talking about globalisation or, the world's steadied down a little bit. But as I said, I think, you've got to be really careful for at least the next 5 years. Doesn't mean there's not places to invest. But you just need to, don't rely on buying the dip or, stocks only go up, property only goes up. It's like, okay.
Don't blindly follow the crowd, I think, as well.
Absolutely.
Something I've noticed over the last couple of weeks, lots of financial advisors are classing the 2019-2020 COVID drop as the end of the old bull market.
Yeah.
And now we're actually in a
new one.
Yeah, which just makes me so angry.
Yeah, that's wrong.
But technically, it actually went into a bear market.
Yeah. But as I say, that can, 10 can become 20, can become 30, 40, 50 really quickly.
Yeah.
Right? And it's no good. I think that we were talking about it somewhere, I can't remember where, but what you're seeing at the moment is everybody's got an indicator which says, the last time this, the market's fallen 10%. Oh, well, the last 3 times this happened, it bounced back and went up 20. And it's like, okay, does that really,
But when was the last 3 times at a Cape of 38?
Well, that's exactly the point, right? Go to 38 Cape and look at how many times that, quote bounced 15, 20%. Blah, blah, blah. That's what you're seeing. You're seeing a lot of it in technical analysis. The last time it had 4 candlesticks down with a head and shoulders pattern with a cup and saucer, man, you killed it. It's like, okay, maybe.
That's one time.
Yeah. So you've just got to be careful because, again, there's that mentality that every 10% decline is an opportunity rather than saying, maybe this is the start of a bear market.
Yeah.
Right?
Yeah, have some second, third level thinking. 200-day moving average, excuse me, is a good indicator that we use typically for short-term, well, just for more of a major signal that shit can happen under the 200-day moving average.
Yeah.
But also allows us to just reevaluate some TA stuff that we use as well.
Yep. I mean, Cape is 38, and if you say, Steve, what's going to happen in the next 12 months? It's like, dude, I haven't got a clue. And you would rightly say, well, thanks, Steve, you're not much help at all. But the argument could be, and this is why we introduced TA, because to say, well, these can help you over the shorter term. And again, like you were saying just then, well, how many falls have been below the 200-day? Big ones. A lot. And you lose a lot of money? Yeah. Okay, and what else happens? Well, the Cape's usually at 35 to 40. Oh, okay, so in other words, like now. It's like, yes. And as I say, if we're wrong, well, that's all right. The market will go back up. You haven't lost, you're not going to lose out on life by going, oh, man, I missed the 10%, rise. What we're saying is, as you just said, bad shit happens below the 200-day and we're below the 200-day across the board. Caveat emptor, as they say.
Oh, Buffett, he's getting into Japan.
Yeah, well, he's raised his stake in those Japanese trading companies,
like Mitsubishi and by a few percent, hey.
Yep, and so I'm just flagging there that if a 95-year-old bloke is buying commodity trading companies, might be something in that.
Yeah.
Right? Especially when commodities are really, really cheap.
He's the guy that we need to be watching closely
Absolutely.
at this moment in time.
Absolutely.
Because he's got more information than all of us put together.
Well, he's got more experience too, Jacob. That's why I think he looked at Apple and went, I need to pare this back a bit. Right? Because he looked at it with China, the geopolitics. You got to remember, he was a young man, in the interwar in the post 1945 period, right? So he's seen the change into the 80s, into the 70s, into the 90s. So he's got lots of experience, and he knows these things are cyclical, right? And there's patterns behind them. That's why he's moving into commodities. He's moving into hard assets.
Things that are generally a bit slower.
Yep. Well, he knows the profit margins will erode and that will be less returns, right? So you've got to make sure you're in the right areas. And commodities have been shown to outperform in high inflation and those periods where the stock market falls.
Yeah. Well, people are always going to buy Mitsubishis, right?
Well, they're always going to use commodities, right? Oil, iron ore. They mightn't use as much, but the price is still going to be expensive.
Yeah, they'll still get used.
Yep.
What have we got here? Inside. Oh, here we go. Insider selling. Who's the? Is it Pelosi? Over in America, what's her name? The
Nancy Pelosi.
Yeah, Pelosi.
Oh, yeah, the Democrat.
And she's just she nails it every year somehow.
Yeah,
It's weird, that isn't it?
Well, yeah. Talk about corporate insiders. Talk about bloody political insiders.
Yeah.
But just again, when corporate insiders are dumping their shares, you might have a good idea. Now, just to update that, go and have a look at the Tesla directors.
Right? They all sold.
Yeah, the Australian who runs that, Robin Denholm, sold $80 million worth of shares, right? And the three other directors have all flicked about 20 million, 10 million. So in other words, Elon's out there going to people, hey, hold on to my shares, everything, we got a bright future. Meanwhile, the board's getting around, dumping shit overboard as quick as they go. Keep talking, Elon. Right. Come and buy my shares.
Sell into that liquidity.
That's exactly right. So, that's where people need to be a bit careful and watch what's going on there.
Yeah. And then Thursday we're talking about valuations.
The move out of US. Europe this year has outperformed America. And at some stage that will probably continue on, right? And it's what we're saying, that there's a lot of foreign money in US stocks that may have to be sold down to go home. One of the theses put forward by a really clever guy called Russell Napier, who people should Google on or YouTube it. He's got some really good stuff and a great book, two great books actually. But he's saying that what will happen is countries will need to get money to build, like the military defence and infrastructure, right? So they can sell bonds, right? But who buys the bonds? Well, they get the companies to buy the bonds. If the company's going to buy the bonds, they got to sell something to get the money to buy the bonds. What do they sell? They sell US equities. So his argument is US equities fall because, Steve Moriarty is now going to buy, the French government says, Steve, you got to buy our bonds. I'm a French company. So I go, all right, well, I'll dump those $100 million worth of US equities and I'll buy the government bonds.
That have just done so well over the last few years. Yeah. They're all up.
Yeah. So, what happens? Well, US equities fall.
Yeah.
Right? So it's a pretty good argument. And when you look at the economic nationalism as well, you'll find that companies will be sort of encouraged, quote unquote, to buy, support their own country, which is what they're all starting to do, right?
Yeah, there'll be an outflow of cash from the US and inflow into just a diverse amount.
Yeah, Germany, into Europe, into Asia.
Yeah, I think it's interesting. How would we follow that other than just...
Yeah, good question. Well, follow us, we'll tell you. Secondly, it's a good question. I'll have a think about it. But I just off the top of my head, I can't think of anything other than keeping up with the global economics stuff and, watching the US market, right? And
the European market.
Yeah,
as well.
yeah.
Especially defensive and commodity side of things.
Yep, absolutely.
Cool. And then on Friday, Edward White is talking about Trump.
Yeah, I've been on this theme for a while with the rare earths and critical minerals.
You've been in rare earths, not in them,
about
but
15 years.
You've been researching them for a long time.
Yeah, I've invested in them as well. The issue is that the rare earths are not that rare. You hear that all the time, which is useless. But the point is, the hard part is the processing, right? So you got a rock. Right, just say you got a rock and you go, oh, this rock's got neodymium, right? And you go, oh, cool, we need neodymium. Great, right. Now we've got to get the neodymium out of the rock, right? So you've got to put it through this chemical process, right, where you go, oh, well, first we'll move the rock. Okay, well, we move that bit out of the rock. What have we got left? Oh, we got the neodymium and 40 other chemicals, right? Okay, we've got to get rid of those, right, until you're left with the pure neodymium, right? As a powder form.
Like a refinement process.
And processing. And it takes a lot of toxicity and dirty chemicals to get it out, right? So naturally, that's why we all went, hey, China will do it.
Probably an expensive process as well.
Well, it's expensive if you want to do it environmentally. But if you're, say, I don't know, China and go, yeah, don't worry about it, let's just get them in and we'll dump the shit somewhere, right? That's why all of the processing of these dirty processes are all in China, right? Because they don't care about the environmental rules like Australia and America and other advanced countries.
And that's owned by China as well. It's not as if some American company owns it in China.
China's got a lock on the processing and the technology. So, we're really over a barrel. And Trump... what is it today, the 22nd? Trump yesterday, the 21st of March, talked about, has written an executive order basically about critical minerals and starting the process. This is where Australia's going to play a big role because it's not the raw materials. Australia's got enough raw materials, right? But we haven't got a processing capacity. There's a few companies working on it. They're going to become quite important, I think. Now, it doesn't mean you race in and buy their shares and make a bucket load, but it's something that you keep a watch on because, again, this is a sort of canary in the coal mine, right? Because if China has already done this in, I think 2011, they said we're going to stop exporting it, and the Japanese freaked out because we've all been sitting here going, oh, this is cool, the Chinese will just keep sending it, right? Now, the other thing is too, this stuff is absolutely critical for military hardware.
Yeah, which is going to be...
It's no good having a missile if you haven't got any neodymium. So you really need to have some neodymium, i.e., right, we really need to, process.
And with the amount of spending going into bullets, bombs, military...
Absolutely.
Then there's going to be more of a need for those critical minerals as well.
Absolutely. So this is where I think you get things like government saying, and Albo's been doing a critical mineral strategy, right? And this is where you're getting, again, you're getting this creeping government intervention into the economy saying, we need you to develop that mine. Oh, well, it's going to take us a 10-year environmental process. You let us look after that, right? You just keep advancing the mine and we'll take care of the environmental politics of it, right? Because you're going to have the greenies out there, there's all this toxicity, right? And the government's going to be going, yeah, just shut up because we need to build bombs, right? It really is going to be like that. And that's where, as I say, governments are going to become more interventionist on national security grounds.
Yeah, I mean, let's circle back to the China piece quickly. So they've got a lockdown on the process at the minute.
Yep.
Are they now kind of withholding exports?
Yep, licenses, and they did it with gallium and germanium, which is two that are used in the making of semiconductors.
Right.
Right. So this is the extent of the interlinked world.
So they're playing around with like supply and demand.
Yeah, well, they say, oh, okay, now you need an export license from Chinese companies, which is a way of saying don't send it to the Americans, right? Because the Americans are saying, well, we're not going to send you the nano chips.
Yeah.
So
And we don't want your cars.
Yep. And the Chinese say, all right, well, to make those nano chips, you need gallium. And guess what? Bingo, we got the gallium. The Americans say, well, if you want to make any chips, we've got the finest grade silicon in North Carolina, which is a 95% supply of the world. You see what I mean? We're now looking at each other going, man, they got the silicon. Man, those dudes got the processing. Yeah, and they got the gallium too. Yeah, but we got the semiconductors. Okay, how are we going to deal with this? Right? Okay, well, we've got to get some gallium from somewhere. Right.
Tariffs.
Go talk to Australia. Tell them to build a bloody gallium factory, right? Like that's what's going to go on.
Right.
And it's messy, right? It's messy, and it takes, to build a mine takes 16 years. Well, we ain't got 16 years, right? And that's where, as I say, you're going to have environmental approvals are probably going to be like, yeah, but that's the home of the fleet-footed bluebird. It's like, bad luck, move the goddamn bird next door, right? We need the mine.
Sorry, greenies, if you're listening to this.
Yes. I'm sorry, any bird
Steve,
watchers, but,
I promise Steve's not a monster.
But it's true, right? Yeah. Look, I'm just telling you, this is real politics stuff.
Yeah.
Right? This is what goes on. It's like, oh, okay, well, you want the fleet-footed bluebird? Okay. Well, if you get that, if we save the fleet-footed bluebird, you could pay $4,000 for an iPhone. Would you like that? No, I didn't think you would. Right. Right. What do? Oh, you do a breeding program for the fleet-footed bluebird.
You move them elsewhere.
Well, you move them elsewhere and you start a breeding program, right? And you shove them sideways. Just get the copper out of the
money
ground.
management, how to breed bluebirds.
Yeah.
All right, let's talk about the bonus section. So, Well 2 strategy, it's March, acknowledging that we're only 3 months into the year, but it's doing pretty darn well.
Yeah. They're in American dollars, by the way. But a couple of things. Notice the Eurozone is 18.8 and the US is -5. 4.3, right? So, again, just saying, you get this mean reversion, right? Now, this, as we talk about in diversification, what you find is America outdoes the world and then the world outdoes America. So, from 99 to 2009, the Americans did horribly, right? Emerging markets killed it, right? Europe, sort of lukewarm, right?
Yeah, bumbled along.
From 2010, America's killed it, right? Cape was really low. It's about 13 or 14. And emerging markets have really struggled and commodities are cheap, right, including Australia. So you get to a point where you say, well, now Europe and emerging markets are really cheap. America's really expensive.
Where do you think the money's going to go?
Yep. And you see that pretty steady on a 10, 15-year basis, right? So this might be the year that Europe starts re-emerging as a place to put your money, like Bernstein said in the front, right? They're paying good dividends. There's some good quality companies. They're now going to start spending a lot of money. So that money's going to go to a company. And that means there's going to be good profits, right? Which means that might be a better place to have your money than putting it in NVIDIA or Tesla or, the other ones.
For the next 10, 15 years or
Yeah. Or, the foreseeable future, so to speak.
Yeah. I think it's good to see that what we chat about every week actually happens.
Yeah.
A bit of affirmation.
Feeling righteous.
That's it.
Have we got one more? I think
we've got lesson of the week, which is a little soul chart.
Yeah, look at that. That tells you a lot, doesn't it?
Well,
sorry. What I'm actually, and I pointed this out in the masterclass, what I'm trying to point out to people there is that's Australia's total credit. Okay, so that's, we're all borrowing, right? Now, that's been increasing. If you have a look at 2000, it went from 1,000, right, a trillion, to up to about 6 trillion. So in other words, in 25 years, we have absolutely borrowed our heads off. Now, it's calculated at roughly about 7.5% compound per year, okay? Now, if you borrow if I've got a factory and I borrow money generally to buy a machine which will pay me back, right, in profits. Instead of making 20 cigarettes, I'm now making 300 and I'm making more money. That's productivity, right? What we've been doing, and that comes up in GDP figures, okay? Investing heaps of money, GDP is growing because it's productive investment. Unproductive investment is buying each other's properties, right? And all we're doing is creating asset inflation. That's what Australia's largely been doing since 2000, right? That's when the property bubble really kicks off with John Howard. But my point being, GDP has been rising at about 2.5% to 3%, yet property prices are going up at breakneck speed. That doesn't last. Something's got to give, right? And that's what I'm pointing out. I'm trying to point out to people that all bull markets come to an end, particularly when you can't see it.
Yeah.
Right? Because you're at the top of it. You've just climbed this magnificent mountain. And as you know, recency bias says it's just going to keep going up. All the economists say it's going to keep going up, and we don't know what will tip it over. I don't know either, but that's what happens. Right? So just in that point, when you look at borrowing, ask yourself one question. Who's borrowing it and what for? Because if you're borrowing it to buy an existing property, that's not productive, right? If you own a property for $1 million and I buy it off you for 1.4, well, there's no productivity increase, right? That's just me giving you more money for it. What you want is productivity, which is you saying, I'm going to buy a business and I'm going to, create, instead of having 3 staff making 100 coffees, I'm going to have 1, and that's productivity, and I've got more profits, and then I'm going to expand, right? Blah, blah, blah.
Yep.
Right? So it's really, really important. I can't emphasise that enough at this point, because we've had a 25-year run in property, and people are talking about the last 5 years since COVID, and I'm saying, no, you need to talk about a lot longer than that.
Yeah, it's just been exponential since COVID.
Yes, it's the reason why our GDP is miserable is because businesses are not borrowing and spending. It's private people speculating in property, right? And that's why property is so expensive, because everyone's bidding up the price by borrowing money for it.
Yeah, yeah. And not reinvesting it necessarily into the business to grow the businesses.
Well, yeah, but even business owners have got 2 and 3 properties.
Yeah, true.
Right? So, that's what I mean. They're not saying, hey, I'm going to go and buy, I'm going to put it into the index and put my money into Australian companies. And politicians are the same, right? Tony Burke has got 6 properties, right? The woman who's the senator in the Greens, who's, screaming about, properties for living, not for making money out of. She's got 3 investment properties and 1 in Pakistan. Right? It's like, pardon me.
Under a trust or something.
Well, it's Albo. Albo's got 4 properties. I might have 3 now. But you see what I mean? My argument would be, hey, listen, how about you put it into the bloody ASX and give it to companies to do productive?
Yeah, let's build some businesses here that can give people jobs.
Absolutely. Right. So anyway, don't start me on that goddamn rant.
We're almost
Jacob,
at the end,
you
Steve.
do it all the time.
You can get there. We're almost there. Short story. So a little bit on Elon. We're thinking that he's probably gone. You've said it for a few weeks now, but he's been in the limelight. He's probably going to move into the shadows a bit in the future and try and fix Tesla.
Yeah, I think so. Because he can't be president, well, not yet. They haven't changed the constitution. My argument is Musk is going to have to make a decision where the big institutional investors will be saying to him, listen, bro, it's nice you're doing all that shit with the government. Can you get back here and fix up the company and the share price? That's, they can cut these, Uber cut Travis Kalanick out of it really quickly. Thanks, Travis. You really created it. It was great. Now we're going to stab you in the back, get lost, and we're putting a bloke in, right? So I think Elon Musk is this cycle's halo,
Poster boy.
Poster boy, yeah. And I think, later on he says, oh, I've done my work in Doge. I've achieved what I've wanted to achieve, and now I'm going to go back to Tesla, which will be cover for, Jesus, I better get back there because, my share price has fallen through the roof and I'm going to get margin calls.
Yeah.
The Cybertruck's just been recalled, right? So unless he can, the only thing I think he can do is try and pull a favour from Trump, right? Is say, well, how can we get the company out of this mess? I don't know. But, when you get the president of the United States, admittedly it's Donald Trump, but when you get the president out on the White House lawn saying, I bought a Tesla, that's a bit like, dude, that's,
cringy.
Well, what are GM and Ford doing? They're looking at that going, oh, I see. Okay, we get it. You're a Tesla dude. What about GM and Ford where all the jobs are?
You're favouring.
Absolutely. Absolutely. So, no money going to the Donald Trump campaign from GM and Ford.
Yeah, that's a good point. And you can almost guarantee there's a fair bit gone in there.
Absolutely. The lobbying but as I say, I just think he needs to, pardon the pun, the wheels are starting to fall off, right? So, as well as the mud guards and the
rest of them.
The rest of them. But, the other, he's been doing this for 10 years, full self-driving, still not here. We're going to have 1 million people on Mars by 2030. Oh, please. Seriously? Like some guy actually did the maths, right, and said it'd basically take, some ridiculous figure, 900,000 flights to get 1 million people, because you can fit 100 and, Musk just says shit. And when the market's rising, you can get away with that stuff because people will excuse it. But when things go pear-shaped, that's when they come after you, right? Because no one's going to stand around and go, you know what, I was really dumb doing that. They're going to say, no, Elon Musk, banged me up, right? That's what's going to go on. So he needs to really have a good look at that and say, how do I get out of this without making it look like I'm stepping down in defeat?
I can imagine him just going out the back door and because he's already been on a few interviews and said it's a lot. Like he's trying to run all these companies as well as
and that's what I mean. I think he's setting it up to go. I had to choose. I mean, if you look at the Doge stuff, it's all locked up in the courts. It's all the judges are just knocking off everything he said. So he's not going to have any success there. The country town hall meetings in Republicans are being absolutely hammered over the stuff from Doge and, killing departments and slashing jobs, right? Because those little communities are reliant on it. And they're the ones who voted for Trump. So they're looking at Elon Musk going, he's pure evil, right? And Elon's up there with chainsaws going, we're going to get all the public servants. And people are going, yeah. Oh, hang on, that's my brother.
That's me.
That's me. So that's why I say the Republicans will be, and I think they've already started saying to Trump, can you rein in Elon Musk because he's doing us a lot of damage and we're elected, right? In other words, Elon's going to sail off into the sunset on his $500 million yacht and I'm going to be unemployed because I got, towed up in the midterm elections. So it's pretty interesting stuff.
Yeah. Well, we'll keep an eye on it and we'll keep reporting. Oh, well, I guess we're like news reporters now, aren't we?
Yeah.
TMM News. All right. For those that want access to the week that was, jump on the website. You can sign up for free. You can see what we're talking about. Other than that, feel free to ask any questions on the socials and we'll see you next week.
Cheers.
Thanks, Steve.
Cheers, folks.
As always, remember, we don't provide financial advice.